What's going on, everyone? D. Anthony here, going to do some technical analysis. So I'm going to do it a little bit different. Instead of releasing, video after video after video, I'm going to kind of compress multiple stocks into one videos to kind of give us some levels as far as to what I see happening and what I'm personally looking to trade. So again, welcome to the channel. I've been doing a lot of changes here. Hope you guys enjoy. But what we're going to start off looking at is the triple Qs. Now, are we going to fall off of a cliff here? A lot of people are thinking that this is going to be a major rug pull come this week with what's going on with the Fed as well as big tech earnings. Now, we could be getting a little bit ahead of ourselves. As of right now, the bulls still have control. In fact, the bulls actually reclaim that 5-day moving average on the daily chart. Now there's about 25 minutes left before the whole overall market is going to come to a close here. We do have AMD earnings that are after the bell, so we're starting to already kind of kick off these tech earnings. So what I'm looking at here, we've got a very definitive line in the sand to the bottom. So what that means is if we kind of go here and we look at yesterday's lows, in today's price action we actually held yesterday's lows. So what I would be looking at here is if anything crazy happens in the after hour session with some of these earnings going on, if we start to lose $289.73, we've got some room to come down into our next rising support. But one thing that I want you guys to kind of keep in mind is as this 5-day moving average is not so much on an incline, more so starting to flatten out, we do have the 10, the 20 and the 50-day moving average kind of inclining, right? So the 5-day moving average is going to be your power trend. It's going to be your shortest term sentiment, right? Who's got control? Normally, whoever controls the 5-day moving average normally controls price action for the next day. As you can see today, we're pretty much putting in an inside bar day. The bears kind of took control of that 5-day moving average. We didn't really go any lower. We didn't really go any higher. So it's kind of like a little, distribution ground where we're kind of, going back and forth between the bulls and the bears. So I'm technically not going to get too, kind of short biased. I know I'm putting out some content kind of saying, this could be the week, it's this, that, and the other, right? Because it very well could be, right? The bull run could very well be over. Only time will tell. So I want to be kind of prepared on both sides of the market so I can make sure and capitalize and profit. Again, I'm only a day trader. I trade options normally in and out within the same day. So I want to find out where potentially could I, make some money, right? So if I'm looking at this right now, if tomorrow we do, have some good feedback off of the earnings that are coming from today, what I would be looking at is a 295.50 price target on the triple Qs. If we do start to close over, and if this week isn't as bad as people think and we do close over 295.51, we've got a very, very good chance at kind of testing that $300 price target. Over $300 on the Qs is going to have a lot of room to really stretch on kind of the macro picture of things. We're over the 200-day moving average. We're over this 50-day moving average. People don't want the fun to end. The party doesn't want to stop, but this is kind of creating, if we kind of zoom out here and we look at a bigger, kind of picture, this is shaping up to be a very, very big trap for the bulls. Now, if we start to lose some of this ground, and if we cannot really start to build over that 200-day moving average, anything below 279 is going to be another leg down, okay? There is no ifs, ands, or buts about it. It's just technical analysis. We start to lose and re-lose the 50-day moving average, we're going to have a lot of room down, and it's going to get ugly very, very quickly. And in fact, we could take out those lows of 254 and then kind of, find a soft landing around 240. I'm just saying we have to be prepared for both sides of the market. So let's just kind of keep that on watch. What we're looking at here is a $298, $300 price target. If we can kind of close over yesterday's highs, we're going to take a quick look at Tesla and just kind of give us some very basic levels here that we're looking at on Tesla. So Tesla's daily chart successfully backtest the rising 5-day moving average. For me, Tesla, I'm long biased going into tomorrow for a day trade, right? I'm not talking about Wednesday. I'm not talking about Thursday. I'm not talking about Thursday, not talking about Friday, not talking about next week. What I'm talking about is for tomorrow. So tomorrow, anything over 174.41, I'm going to look to take that long. I'm going to just try to target these two candlesticks here, 178, 180. I'm not trying to catch the whole move, just trying to catch a couple of points. Now, obviously, if we do roll over to the downside, very, very easy level for a short position. We're looking at 163, okay? 163 to the downside. Let's look at AMD because they do have earnings, right? So we're going to look at AMD here. AMD actually, came into that support here, reclaimed its 10-day moving average, reclaimed its 5-day moving average, and it's kind of just resting right here at the supply zone. This supply zone is the 150-day simple moving average. So kind of pull that up on your chart, put the daily time frame on there so you guys can kind of see exactly what I'm looking at. If AMD has good earnings and the market likes what's going on here with AMD and what their guidance is and what they're saying on the conference call, ton of room to stretch into $80. That's going to be my next price target on AMD. If we decide to kind of roll over, I'm not too bearish on AMD until we start cracking below $71 and $70. Anything below that would be losing the 50-day moving average, and everything is, all bets are off once we lose that 50-day moving average, because then that would break this whole uptrend that we've had the past 3 or 4 weeks. NVIDIA is soon to follow here. So what we're going to be quickly looking at with NVIDIA, again, as you can see, hell of a run up that we've had here on NVIDIA, as well as the other major tech stocks. A little bit of a 2-day pullback into the 10-day moving average. Still completely bullish. In fact, healthy. This is healthy price action for moves to continue higher. Again, we have to always play devil's advocate. The market could come back down, but again, looks very bullish, right? So if we do start to close below 188.62, okay, now all bets are off. We've got some short-term kind of room to play with here, so we can kind of make some money on the continued pullback, right? So anything below the 10-day moving average here, any close is going to have room into 178. That is a short position that I will be looking to take on a day trade, right? We've got a lot of stacked moving averages, a ton of support all the way down, just brick by brick, all the way down to around $150. So things look very, very good for some of these tech stocks. We're going to take a look at Netflix really quick. Some people were kind of complaining, oh, Netflix is pulling back. Guys, Netflix came from a floor of around $162 and has never looked back. This stock is on a tremendous bull run. Let's call it what it is. The market may not be on a bull run, but certain stocks might be on a bear kind of cycle. Some stocks might be on a bull run. This stock is on an absolute tear. All it's doing is making high after pullback test, high after pullback test, high after pullback test, high pullback test, new high. So currently where we're standing on Netflix is we're currently on that pullback for a little bit of a back test here, and we've pulled right back into that 10-day moving average here. Anything below 348.50, again, does not mean that the bull run is over on Netflix. All it means is we've got continued downside into 337 in case you want to go ahead and take that short position for the short term. Again, if we do start to reclaim 360, it's the 5-day moving average on Netflix. Ton of room to retest these recent highs here. Again, we're going to really have to, you guys couldn't even see that screen. Let me move this over real quick so you guys can see that. Here's the 10-day moving average here. Here's the 20-day moving average. If we do start to lose this, I would expect that pullback into 333. If we reclaim the 360, I would be expecting to kind of make a new high here. Again, all we're waiting to see is how does the market react to what happens with the Fed this week. Also, how does the market react to tech earnings, whether they are good, meet expectations, do not meet expectations. How does the market react? Okay, it doesn't matter to me what AMD does, what Netflix did or what Netflix is going to do. It doesn't matter to me what Apple did or what Apple's going to do. It doesn't matter. All that matters to me is how does the market kind of digest this information and what do they do with it? Okay, if they want to go ahead and pull the market back in, I've got my levels here and I've clearly given them to you guys. You guys can kind of follow along and we can take advantage of those short-term opportunities. If the market does want to continue to go higher, we also have the levels that we need to reclaim in as far as the levels of supply before we can actually kind of go higher up, right? So again, we'll do one more stock here. Tesla, NVIDIA, AMD, Netflix. Let's do Apple, okay? Let's do the big Apple here. So taking a look at Apple, again, guys, we cannot complain about a little bit of a pullback. Apple came off of a bottom floor here in the beginning of January of a price of $124. Guys, Apple is up $20 since just the beginning of this month. we cannot complain. That is a massive run. We've only had 3 days prior in the last 3 weeks worth of red before we had yesterday's red candle close. And if you kind of look at what Apple did today, it's resting today, it's consolidating. We have two levels, okay? Obviously, we know stocks can go up, stocks can go down. Yeah, right. That's a no-brainer, right? But which way is it going to go? Again, guys, so many times I see people asking questions on social media, on YouTube, on Twitter. Do you think that the stocks are going to go lower based on XYZ? Do you think that Apple's going to continue to make a new high? Do you think that Apple's going to go down? It doesn't matter what I think. It doesn't matter what you think. It doesn't matter what the next person thinks. What matters is what the stock does. What is the data showing us? And potentially, based on our technicals here, on our supply and our demand zones, if the market wants to sell Apple down, potentially where is it going? Because that's the trade that I want to be involved in. If the market wants to continue to grind Apple higher, potentially where could they go, right? So when we talk about stocks and stock prices and what trades we're going to take and what investments we're going to make, we can't really just look to ask somebody, what is the market going to do if we only raise interest rates 0.25 versus 0.5. None of that matters, guys. It matters is in the context where, yes, it's going to move the stocks up and down, but trying to guess about what it's going to do if this happens is like a mental explosion, okay? It's like mentally exploding when I think about that. I would rather sit back, let the market do whatever it wants to do, right? Whatever it wants to do, and then with that, right? With the market doing whatever it wants to do, we can go ahead and take our positions based on that. So if you kind of think about it, guys, you really don't need to kind of get caught up in what the market is going to do, but in fact, you want to just be ready for whatever the market does do and start to react to that. So again, with Apple, I'm not too concerned on the short position until we start to lose this 140. As soon as we start to lose this 140, then maybe we've got a little bit more room down into 138.80. But what I want to kind of highlight to you guys is, because of the move that a lot of stocks have had over the past 3.5, 4 weeks, the moving averages and the demand zones are stacked right on top of each other. So what that means is, as we pull back, we're going to stop, soft landing, bounce, and then if the market's going to continue to be weak, we're going to come back down again. So what you need to do is play those kind of soft landing bounces if you're a bull. If you're a bear, then what you want to do is, when we start to lose a level of demand, you want that confirmation on the next day, and you want to play that into that next soft landing, right? And if you're just a day trader or a scalper, or you're not a bull or a bear, and it doesn't really matter which direction the stock is going, well, then make sure you have your levels to the both sides. Again, guys, market's going to be moving crazy today. There's going to be a lot of people saying outlandish stuff on social media about where potentially we could be heading. Allow the data to do the work for you. And again, I will see you guys all on the next video. I've got a lot more content, new stuff coming out for you guys. I wish you all the best this week. Again, doing a new style of video here where I'm going to group in a group of 4 to 5 different stocks, either in the pre-market or after the market closes, and then we're going to go over all of those stocks. I'm going to go over all of my technicals, all of my analysis, everything that I've got for these stocks, kind of give you guys these levels so you guys can be ready to attack the day and make some money. And again, with that, my name is D. Anthony with Evolution Traders. If you guys want to trade with me, my link is down in the description box below. I will see you guys all next time.